Bem, bom dia.
Good morning, everyone. We are beginning our webinar for the earnings at Papel Embalagens Irani for the first quarter of 23. I'm Sérgio Ribas, I'm the CEO. Together with me, we have Fabiano Oliveira, our Personnel Strategy and Management Director, Henrique Zuckermans, our Paper, Forestry and Rawson Business Director, Lindomar Lima, Director for Packaging, and Ojiva as our CFO. Our earnings call is a webinar where participants will have their video and mics off, but we'll begin with a presentation of our results. Soon after, we'll provide time for questions. So the questions may take place through Q&A on the chat or we'll open up your mic. We're also providing simultaneous translation into English. Just select the option. And the webinar is being recorded and will be provided in both languages on the IR website at Irani. I'll share the presentation. So going over the earnings in the first quarter, the last 12 months, we had net operational revenue of 1,685,606, and this is 1.7% higher than the previous 12 months. And the last 12 months, we had a net income of 349 million, 2.4% higher than the 12-month period before. The adjusted EBITDA, 529,630,000, pretty much in line with the previous 12 months, 0.1% lower. And investments in the Gaia platform, which were 767,536,000 up until the 31st of March this year. So the net debt to EBITDA ratio is 1.51 times. The ROIC was, in the last 12 months, was 22.8%. And the cost of the debt in the last 12 months was 13.8%. So when we look at the earnings in the quarter, we had an operational net revenue of 406,884,000. It's 0.3% lower than the first quarter of 2022. And the adjusted EBITDA, it was 128,210,000. This number is 6.1% lower than the first quarter of 22. The net income was 82,958,000, 26% lower than the first quarter. And investments performed in the Gaia platform in the first quarter were 56,093,000. So when we take a look at the comparison with the fourth quarter and the fourth quarter and the first quarter of 22, 1 year ago, we have a revenue of 406,844,000, 0.4% lower and 0.4% below the fourth quarter of 2022. Our EBITDA was 128,210,000. It was 7.5% lower than the fourth quarter of 22 and 6.1% lower than the first quarter of 22, with a EBITDA margin of 31.5%. So the net income was 82,958,000, 3.4% lower than the fourth quarter and 26% lower than the first quarter of 22. When we take a look at the volume of corrugated cardboard packaging and sustainable cardboard, in regards to the first quarter of 22, we're having a market perspective here. The market had a peak of 2% compared to the first quarter of 22 and a drop of 2.6% compared to the fourth quarter. And this is due to the seasonality. The last 3 months in the year are normally stronger. And with this, we end up having a bit of a drop in shipping compared to the fourth quarter. But the good news is that we had some evolution in the first quarter compared to the first quarter of 22. In square meters, it's pretty much the same. A peak of 2.4% and a drop of 2.1% compared to the first quarter of 22, with 1,838,203,000 square meters shipped. We had the performance that was better than market, mainly due to the new capacity for the unit in Santa Catarina with the Gaia 2 project that we're going to be discussing. We had an evolution of 10.7%. We shipped 38,103 tons, and this is 4% lower than the fourth quarter of 22, mainly due to seasonality. And in square meters, we had a peak of 6.2% with 75,911,000 square meters, 4.3% lower than the fourth quarter of 22. So then the prices in regards to the first quarter of 22, the packaging prices had a drop of 3.3%. And basically, they were stable compared to the fourth quarter of 22 in tons. When we look at square meters, there was a peak of 1% from an annual perspective and an increase of 0.3% compared to the fourth quarter of 22. So it's a pretty stable scenario for the prices compared to the last quarter of 22. When we began to work with the paper business specifically, the sales were smaller than the first quarter of 22. And this is mainly due to market issues, but also because of shutdowns we had in machinery at the factory because of our Gaia 1 project, which will start up from the next month. So throughout this quarter, we did have some shutdowns in our paper machines that did affect our total sales as well, besides the market issues in the first quarter, which was a quarter that was super challenging when it comes to volumes. So we had a drop in regards to the first quarter of 1.7% in the paper for flexible packaging, which is what this top column has. This would be paper for bags, packaging, industrial bags overall, that we sell directly to the market to have independent conversions in Brazil and the US. And we sell 6,492 tons of paper for corrugated cardboard, which is lower than what we sold in the first quarter of 22, but a little higher than what we sold in the fourth quarter of 22. Due to the seasonality, we had to transfer a little more paper to our packaging units, and we sold a little less. When we look at prices, the prices for paper bags and packaging that we sold in the market, mostly virgin fiber packaging, we had an increase of 14.7% and 2.5% compared to the fourth quarter of 22, a total of 6,745 reais per ton. It's an important evolution. We were able to, throughout the first quarter of 23, perform all the price transfers expected for papers and fiber that we had expected in 22. So when it comes to paper for rigid packaging, which is basically for corrugated cardboard packaging, which is like testliner and the pulp, then we're talking about a drop of about 8.8% compared to the first quarter of 22. And 10.5% compared to the fourth quarter of 22. So the prices of these papers are really correlated to the price of the scraps. These scraps have been going into a drop in prices, which was really intensified in the first quarter and continues to have this drop trend. When we look at the scraps in an annual vision, when you look at all of the Anguchi data, the scraps prices dropped 15.1% ever since the first quarter of last year. And this was 11.8% compared to the fourth quarter. So the drop was accentuated. And in our case, the drop was quite similar, 15.8%. It was a little bit more than market levels and 10.5% compared to the fourth quarter. So the drop in the scraps has been contributing to our earnings in the recycled product supply chain, since prices were kept pretty stable and scraps had this significant drop. And I believe that this remains in the second semester of 23. So in the case with the CIF prices, the drop in the Santa Catarina unit was 13.5% and 8.7 compared to the fourth quarter. And in the Minas Gerais unit, the drop was 10.1% and 10.4% compared to the fourth quarter, ending with 733 reais per ton. And I just want to remind you that this is the CIF price. And in total, Irani had a drop of 12.4%, reaching 823 reais per ton and 8.7 compared to the fourth quarter of 22. When we get into the Rawson business, this has been a real difficult business throughout the last year and this beginning of this year, because the Rawsons are like international commodities, so the prices are determined by the worldwide market. And there was a significant drop in the prices throughout 22, which were increased in the first quarter of 23. So we had a significant drop in the production and volume of sales of 4.1%, and ended with 3,100 units sold and 71% higher than the fourth quarter due to the seasonality of the business. The last quarter is normally the quarter where we have the lowest volume of sales, and the first quarter is when you recover the next batch. And typically this is a significant sales phase. So prices had a very big drop throughout 22, 37.3%. And a drop that was really accentuated from the fourth to the first quarter of 23, and also even levered by the currency exchange rate. So we also had a drop of 35.4% in the turpentine costs and 12.1 compared to the fourth quarter of 23, adding up to 13,377 reais per ton. So this is a significant drop, and basically the difference of the EBITDA that we've noticed in regards to the same period last year is mainly due to the Rawson business, since the paper and packaging business has been appearing to be a little more resilient when it comes to volumes and prices. Now, when we look at the financial aspects, the net debt to EBITDA it increased a bit as planned due to the investments in the Gaia platform. So we reached 1.51, and we're even better than what we had planned initially due to the fact that our earnings have been progressing very well. And we ended with a gross debt of 1,833 and 1,033 million as a balance, a bit of a drop compared to the fourth quarter of 22, and a net debt of 799,694,000 and a leverage of 1.51 net debt to EBITDA ratio. So 98% of our debt is in national currency and 2% in foreign currency, whereas most of our revenue comes from reais. 87% is long term, and we only have 13% of our debt as short term. When we look at the return on invested capital, there's a bit of a drop compared to the last quarter, going to 22.2%. But it's a pretty significant level. Most of the paper companies worldwide, and 2.6% lower than what we had in the first quarter of 22, which was basically the peak of the ROIC due to the higher earnings and the non-actual use of the investments for the Gaia platform that are basically taking place until the second quarter of 23. So the buyback program that we launched last year, we've already fulfilled 44.77% of this buyback program, with a limit of acquisition of 9,833,806 common shares, and that represents 10% of the total common shares issued by the company. And so until March 31st, we already had bought 4,402,700,000 shares, representing 44.77% of the program that we had completed. It's still it's still in progress, because we understand that the share price currently does not represent the intrinsic value of the company. and thus it is a very important investment for the company, and therefore it's also something very important for our shareholders. So when it comes to we paid 21,197,000 dividends of 0.08 per share. In the last 12 months, we had 164 million in dividends, and we had 0.66 in dividend per share, which would be a dividend yield of 9.75%. Very significant in the last year due to the significant results that the company achieved in the last 12 months. When we take a look at the Gaia platform, which is this investment cycle that we're currently working on at this moment, we did have two phases in the Gaia platform. The first phase was 5 projects. The second cycle was also from another 5 projects. And the main projects in the Gaia platform when it comes to values or earnings or competitive advantages are the projects for Gaia 1, Gaia 2, and Gaia 3, which are already going through their final phase for completion. The Gaia platform as a whole has an impact in our productive capacity for paper and pulp of about 29%, an increase in production of corrugated cardboard that represents about 23% due to the expansion in the Santa Catarina unit, and we're going to increase the energy production by 56% with Gaia 1, and we have another 10% with Gaia 4, 33% with Gaia 5. So there's a significant increase in the production of energy with these investments, with Gaia 1 becoming self-sufficient in our site in Santa Catarina, and the leveraging of our PCHs and all of the production plants at Irani with some leftover power for the greater rain periods or hydric power energy production phases. So we already have this approval of 1,600,000,000, where 877 are net investments. We invested 56 million in the first quarter of 23, and overall, ever since the beginning, we've invested from this total amount 767 million reais in the Gaia platform. So most of our investments have already been performed, and the most disruptive projects that have higher values are taking place already, and they're at this final completion phase, which is Gaia 1, the expansion project to recover chemicals and utilities, and the boiler, which is the main investment that will bring substantial returns for power generation, paper and pulp production, improving the mix of the fiber paper mix, the expansion of the Santa Catarina packaging with the expansion of the factory and some other box conversion machines, and the refurbishing of the machine 2, where we produce paper for bags and packaging, a segment that grew a lot in the market, and we're leaders in this market for craft paper bags. And also with the expansion of machine 2, we'll be able to work with this market niche even more. So basically, when we take a look at the schedule, Gaia 1, which is the main project in this cycle, is at this completion phase, right? So the boiler should start up by the end of the first quarter. We should be, from June onwards, start to have a performance curve until the end of the year. But the investment as a whole with the physical actual execution is pretty much complete. And now we're going to be starting up the equipment, performing the natural adjustments in this project as a whole. So the expansion of this Santa Catarina's packaging is also almost complete. We have some final adjustments, and it started up in October last year. Working on a performance curve at this moment. The machine has had production that's above what was imagined initially. We're still working with the PCHs to receive the environmental licensing. We still rely on these licenses for the basin of the river and water basin around the regions where the PCHs are. But we've already gone through the process to receive the licenses from ANEL, and we'll have this authorization also from the environmental authority. And after we get this license, we should start investing already, as these should be started till the end of this year. So we have this process and system to manage processes as well that will promote the digitalization of our equipment in this 4.0 industry. This is an investment that's pretty broad. We've been working on all of our production plans, and it should be complete till the end of this year. And then we'll get into the performance curve throughout next year in the first semester. So then the expansion of the ET is in progress, and we should be completing this. We can have more pulp production and paper production. A new printer that's already been acquired. 100% of this project is pretty much complete. Automation of the intermediary stock that's going to be completed now in the second semester of this year. Then we'll get into a performance curve. And with this, we'll have the full factory in Indaiatuba completely automated. And it's a region where you have a big competition for labor. So we're going to take our Indaiatuba unit to a higher automation level. And the flex folder printer for the Santa Catarina unit was already negotiated, and we should be receiving it by the second semester of next year. So we have the potential for physical execution. The 3 first projects are already complete. The new printer is pretty much complete as well. So the 4.0 industry, half of the project will be complete this year. And for the ET, half of the project will also be complete this year. So we have the performance curve as well up ahead. Great. So here you have some complementary data for the quarter in the last 12 months. And we recycled 241,000 tons of paper. And in the first quarter, we recycled 59,000 tons. And the plastic with the scraps, we were able to recycle 1,407 in the last 12 months and 385 tons in the first quarter of 23. So in this quarter, we also had some important recognitions and acknowledgement. We were acknowledged as one of the best companies to work at in Brazil for people above 50, which is a diversity category. So we've been recognized and how it's recognized as one of the best companies to work with people that are over 50. Once again, we're recognized by the National Foundation for Quality as one of the best companies in management, this time with the Silver Award and Trophy. So last time we got bronze, but this year we got silver. So it was an important advance in our score, and we should be moving towards an even higher award, which would be the gold trophy. Continuing with this process to achieve management maturity with the best-in-class practices. We also received last year the Entrepreneur of the Year award, 25-year anniversary of this award that's promoted by Ernst & Young, EW, and we were classified in the master category. And we also had the AIMBA News, which was a package that was awarded by the Roberto Hidaishi Trophy as well. So then we have our investor relations team always available to support our shareholders and investors. So Jivan as our investor relations and CFO director. Andre is our investor relations manager. And then we have our team supporting them, Mariciane, Italo, and Daniela, investor relations analysts. And then the support areas, Marcos and Emmanuel. In accounting, we have Evandro and Alex. And then in new business, we have Giovanna. So this is the team that's always available to help and assist our shareholders as possible. So that was it for the presentation. This is what we wanted to share with you. And from now on, we'll open up to have our Q&A session that any of our questions that the audience may have. Well, Sergio, we do have a question now from Guilherme Nips, but before that, I would like to say good morning, everyone. Please feel free to add your questions on chat, Q&A, or ask us to open up your mic if you would like to ask live. The first question from Guilherme Nipes is, he would like to hear about the demand for corrugated cardboard in the month of April and May, and how you're looking at the prices of the scraps in this period. Well, the demand in the first quarter, as we mentioned, was even better than what we imagined. Actually, we were already foreseeing that it would be a difficult quarter comparing with last year. And even so, it was 2% higher than the first quarter of 23, which demonstrates that the demand for corrugated cardboard continues to be resilient in April. It was also moving towards the same direction. And in May, we still have not much information to discuss, but the portfolios seem to be pretty positive with volumes that are very similar to what we've seen in the past month. So we see the demand for corrugated cardboard pretty good, but the market is a little more competitive when it comes to pricing. So really there is some more competition with the new bids and demands, especially from big accounts, to reduce prices at a moment where the scraps did have a significant drop. So the scraps became the most important justification to have price increases during the pandemic, especially when scraps reached almost 2,000 reais per ton, and now they're about 600, 650 reais per ton. So there was a very big drop in scraps, and the prices had an initial drop, but they've been keeping up with this level of 7,000, 7,500 reais per ton. And this is at a moment where the scraps went up at real high, all-time high levels, right? So we expect that. So we think this dropped below historical levels. And so throughout the pandemic, really, with the exuberant amounts of demand, there were small increases in capacity. There was no big factory starting up, but all of the big players had some kind of a measured investment to reduce their bottlenecks and their production plants. And these capacities are placed in the market, which makes this, even with this increase that we've seen in the demand in the first quarter, it makes the demand a lot more competitive. So we do hope that the second quarter will be a bit more difficult when it comes to demand, but due to the seasonality, the second semester should be naturally positive because the first quarter didn't really demonstrate much of a drop in demand compared to last year. So the second semester should have a full occupation of the capacity, and the price behavior should be a lot more positive throughout the second semester. Lindomar, do you have something else you would like to add on the demand for corrugated cardboard? Well, that's exactly it. Well, now with Angela's question, we wanted to say good morning. We noticed there's a drop in scraps in the first quarter, and the average price for sales of packaging were pretty stable. So would this scenario be kept in the second quarter? Well, no, I think we've noticed a small drop, and there should be a drop in prices, of course, but it's one of the important points to consider here in our strategy is preserving the profitability. So the concessions made are very small, and if there's a drop in prices, it's going to be small, but it could exist compared to the first quarter. Okay, great. And Marcos also has his hand raised here. Mario, could you open his mic, please? Can you hear me? Yes, we can hear you. Great. So congratulations on the earnings, guys. Thank you for taking my question. What I would like to know about is, it was clear in the presentation that there was a drop in prices, that basically all of the products sold by Irani. So I wanted to get your feeling on the continuity of this drop trend, or if you think you reached the price that should be stable from now on, so we can work on our projections here on our side. Well, Thank you so much for that question, Marcos. In line with the previous answer, also, I think it's important to mention that we're at this moment where the margins of recycled product chain is at a historical peak. And prices are way above the historical average. So, with the demand in this second semester, where you have capacity, we shouldn't see much of a difference. But if there's a drop in demand that's more significant, then we could, of course, have a drop in prices that's more significant. So it's really difficult to have a precise notion of this, but the second semester is very close. So I don't think we'll have too many changes throughout this year. But if there is a recession, however, the margins will probably drop a bit compared to what we're seeing today, what we're looking at today. So for the other products like fiber paper, we had an increase of almost 15% in the year. So it's very important. We were able to anticipate the increase expected for 23 because we already had this prognosis that we would have a first quarter that was very difficult. So we started with the increase of prices close to October last year. And we completed this price increase for all of the fiber paper products, which brought us a bit more comfort in regards to profitability of the segment this year. And we never had, in the historical history of the company, any kind of rupture in the prices, which normally replace the inflation. So we don't notice much of a drop in prices for the paper for the market. The prices that are connected to the scraps, then they do have some drops because of the correlation with the paper from scraps, and the pulp as well is very significant, but we already had a drop. And if the scraps continue to be in a dropping trend, then we should have some kind of a drop as well in the papers for corrugated cardboard. But for the products and papers from the market that are about those 25,000 tons in the first quarter, then no, we should keep the prices for these throughout the year. And in the second semester, if we have a typical scenario, we should repeat the price transfers that we had by the end of this year as well. So, Sergio, when you look at the midterm, we also had the arrival of the return of investments in the Gaia platform. So if on one side you may have some kind of a margin reduction, there's also the entrance of the returns on investments that also kind of offsets this in worst case scenario. So we're investing almost 800 million, as you saw, but not much is impacting our results for these investments still, especially with Gaia 1. Yeah, no, for sure. I understand perfectly. And the idea is not to try to disregard the efforts that Irani has had in the last 4 years. But you actually deserve compliments, right? But it's just about the overall market, really, and understanding how the prices abroad are behaving. And what you guys are looking at up ahead. And I even saw that the Rawson prices dropped. But of course, all of this depends on economic factors. But since we do have wars going on, inflation going up, a peak in interest rates around the world, although our cycle is with a drop in interest, we don't know up until when. So it's really just to understand what your guys' feeling is about prices over time up ahead due to the market. And that's pretty much it. Yeah, great, Marcos. So just to add on, we have significant share in the food sector. So about 70% is in the food sector, which is a segment that is more resilient when it comes to demand. And there's no pressure really on price reductions at this moment. except for like the big accounts that maybe have the bids, and in this current context could end up in some kind of situation where you lead to some drop in prices in the market as a whole, not necessarily us, right, but the overall market. So the international market, I think you could add on to this, of course, is a lot more challenging because of the worldwide situation as a whole, right, regardless of the war and the post-COVID scenario, but also because of the Argentina situation, which is a very important market. Argentina is short in paper, and the Brazilian companies supply the Argentine market. And Argentina is one of our main markets, and we stopped selling due to the currency situation in Argentina at this moment. So this has been contributing to exports, and with a price drop in these countries, especially in Asia. Hiki, please. Can you contribute with your vision? Yeah, okay. So, hi guys, good morning. This is a business, the Rawson business went through an important peak during the pandemic period. So, the customers in Europe had this feeling of like a full lack of products, especially considering the fact that the main producer was China and the harvest there was really bad. So, of course, this benefited Brazil, and the uh, use of Rawson and turpentine was also really benefited. Customers bought huge volumes in 21 and 22, but in the end of 22, with the war and the inflation scenario, customers were hyper stocked with high prices. And that's what made prices started to drop from the fourth quarter of 22, as you've seen. And then you had a reduction in production overall for this product. And so this remains at an even more stable scenario. In the first quarter, we already recovered a bit of the volume, but we're still in a situation where prices are stable, but the raw materials that are part of this product, which would be also the scraps, dropped a bit, and that, of course, improved the margins. So when we talk about the paper market, it's really what Celso mentioned. So Argentina is short in paper. They really need Brazilian paper. And we've been exporting a lot less due to the issue with the receipts. So we've been exporting to more distant markets, and we haven't been able to export the same volumes, but then we did have a bit of a drop in prices considering that we're a little more distant with the freight, etc. But I do see a scenario that's a little bit more stable. Before, we were a little more afraid with the external scenario, but now I notice that there are more interest with a little more stability, but it's not like an improvement we can celebrate, but it is a stability that's a little better where we can have some more predictability. Well, we have 9 more questions here. Well, thanks, guys. So we're gonna continue here. No, we can continue. So anyways, Bruno Oliveira is asking about what are the perspectives in regards to the leverage, considering that the Gaia investments are in their final phase. Well, our expectation is that it should be below our target, which would be 2.5 times leverage. That's our expectation if we were to consider the maintenance of these results in the next quarters at pretty much the same level as the fourth quarter last year, the first quarter this year. Okay, perfect. Matheus Silva has a question about reducing dividends to be able to expand the buyback program. Is that on the radar? No, we have a dividends policy, and we would like to follow this policy, continuing to pay 25% dividends at every quarter and adding on to 25% at the end of the year, as long as leverage is below 2.5 times. And all of our forecasts and projections and investments have been following this dynamic of keeping leverage below 2.5 times. And with this being more attractive with our shares in the market through the payments of dividends, besides the value of the company. So our policy is to pay 50%. And throughout the period, we should, of course, we could have some kind of a leverage going over 2.5 times. But we're not looking at this kind of situation at this moment. So we should keep our leverage below 2.5 times. We should start this deleveraging process pretty quickly from 2024 onwards, and the buyback program is taking place actually at a pretty good pace. So it's already 44% delivered, and it's going to go on until the beginning of 2024. So it's pretty much both things. So optimization of the capital structure and the buyback. So this is what we're doing at the moment. And then we have Osavo Santana congratulating us on results, and he's asking if we have any forecasts for dates of when Irani will be 100% self-sufficient with power. Well, with Gaia 1, we become self-sufficient in our main production plant in Santa Catarina, where we have 4 paper machines and 1 packaging machine. So we will be self-sufficient from the beginning of the second semester already. Of course, you may have some setbacks in the startup of the boiler, but this is natural in any process, but we should be self-sufficient in Santa Catarina. At the other production plants, for us to be able to reach self-sufficiency, we would have to have the expected investments at the PCHs, which are the first hydropower plant centers. So we have 3. 2 of them are already approved. The investments are already approved in the first cycle. And as I mentioned, we're at this final phase to get the environmental licenses, which could take a little bit more, a little longer, because you have to complete the licensing for the river basin, which would take a bit more time. But the specific license should not have any kind of setback. All right. Then we have Jose. He's saying, good afternoon on Prodex, Santa Catarina. Do you have the intention of having the company use these benefits? Thank you and congrats on the results. Well, Prodec, actually, I think it's a really important question. They actually disclosed a material fact on this, just so everyone can understand what this means. Prodec is basically a funding of the incremental ICMS that the company will have due to the investments they're performing. It's 48 months free of interest. So it's not like a tax incentive, it's a monetary incentive. So the state funds the increment of ICMS, and we do foresee this increment because so from the moment when it's operating in full, so this will allow the company to fund about 70% with 48 months term free of interest. So this will be performed during 15 years, and then it'll be an important source of funding. So it's not a tax incentive or credit. It's a monetary incentive that the state can grant this kind of funding. And of course, we will use this as soon as we sign the contracts and complete these informalities, because it's going to be an important way to get support from the state, and then a way for the company to also reduce their cost of capital with third parties, because that becomes a pretty cheap funding price. And then you have about 700 million as a limit approved. And it shouldn't reach the 700 million, it should be way below this, because there's like a limit for the funding. So it's going to depend on the dynamics for ICMS, but then we'll be able to decide if we're going to use this or not. But we won't use this all simultaneously at the peak level when we use this at the limit of this benefit. The other point here is that the company, about the prepayment of debentures with 13 this year. Well, I don't know if we've already mentioned this, but actually what happened is that we had the fundraising initiative for that debenture connected to the CRAs in October last year, and we were able to anticipate this. Today we have over 1 billion in cash, and so this resource was intending to really perform the prepayment in July, or from July onwards. So we don't have this decision yet, but it could be July, August, September. It's not like a fixed date yet. So the money's already in our cash position. So we're just going to be monitoring this and see how the market will behave. We want to preserve liquidity. Of course, today we have too much liquidity, so the company doesn't need to navigate with more than 1 billion in our cash position. But this is an option that we haven't defined yet because we still have time to think about this prepayment situation. But that would be let's say our plan A. Okay. So, hey Xing, how's it going? Good morning. Congrats on the earnings. We've read that in the e-commerce segment, there's been a slowdown in sales. So, how has Irani felt this demand in the e-commerce segment? Well, it is a segment that has been keeping up with important growth, double digits, there's a bit of a slowdown compared to what we experienced in the pandemic. So, we have very positive expectations with this segment
circunstancialmente está passando por
from a mid to long term perspective. But of course, we're losing a bit of the pace due to the economic scenario in the country. So there's no way we would be exempt of being affected, right? There are two issues though. There's not really the same dynamic as we had in the pandemic, of course, but there was a shift that was significant in the behavior of these consumers when it comes to e-commerce. This remains. And home office is a reality for many companies. And with this, an increment or maintenance, let's say, of the dynamic. So, one mid to long term perspective is that we're quite optimistic about the segment. Well, I don't know if I answered. So, we answered a bunch of questions, but we still have another big batch of questions here. Anyways, could you mention an overview of the main factors that made the adjusted EBITDA be 6.1% lower than in the first quarter of 22? I think there's different things, but if you compare business by business, the biggest difference is in the Rawson business, where there was a significant drop in international prices. And with this, much smaller EBITDA than what we had in 2021, especially. Throughout 2022, there was a bit of a drop in the earnings. We'll see that most of the difference comes from the Rawson business. It seems Klabin is planning to intensify its operation in the international market with the advantages that Irani has. Will we be able to fight possible competition? A paper factory is competitive based on not the size, but the competitive conditions it has, right? So Irani, after the Gaia platform, will be very significantly competitive. And so we have factories, and we sold most of our packaging really close to our factories in Santa Catarina. We have our own energy. So the conditions for competitive advantages at Irani are very significant compared to all of the other market players due to having our own energy, the cost of labor in our main site, which is lower than the national average. So this makes us have the conditions to have these results that are structural and a lot better than most of the companies in equal conditions, right, when it comes to competitive advantages. So Angelo also mentioned that as there's a drop in the volume of the craft exports, is this going to be complaining? Is this going to concern you when it comes to recycled paper? No, it doesn't, because it actually changes a bit of the structure. Actually, at the end of the day, if Klabin or West Rock produces with recycled paper, virgin fiber, that doesn't make a difference to us, because what actually changes is the pressure on the scraps, right, which is dropping prices because of the bigger amount of virgin fiber in the system due to the kraftliner market that's really affected. The US had an important drop in demand, and they added more paper in the world, which made the prices for kraftliners drop a lot. and in the last few months. And with this, they add more paper to the internal market. So Klabin announced the closing of two paper machines when that they acquired when they bought International Paper. They discontinued these machines and they added paper for the new machines that started up about a year or so. And the second machine is starting off now. So there's a bit of a shift in the raw material from the competitors, and this makes the scraps market be oversupplied, keeping the scraps at a level that's way below the historical levels from now on. So there is a shift, and it's a structural shift in the scraps market in Brazil. We have a bigger offering or supply of virgin fibers, and with this, so the US has a system where most of the scraps are virgin fiber. So this is why the US is a big exporter, because they generate the scraps and they are not reconsumed by industry. So in Brazil, the situation is not that complicated as it is in the US, where they have to export the scraps. But once again, if you have an important increase in volumes, will make the system have an increase in scraps that could be exported or discarded in the most distant markets. And in most of these packaging markets for corrugated cardboard, we use recycled paper, and it has pretty much the same competitive advantages. So we have the recycled paper that had pretty much the same performance. You have the application of chemicals, special presses, and all of this. This makes the test be very closer to this, a lot closer to this. Hi, Kai Gruner. Good morning, everyone. Could you mention your expectation on the evolution of the costs, excluding the scraps in this year? If you could mention the assessment between the main lines, chemicals, paper, fuel, wood, among others. Well, what we're seeing for scraps is that, as I mentioned, they are structurally on a trend of keeping up low levels. And for the other prices, we've seen a bit of a de-inflation process. So the IGPM rate was negative in the last month, with less cost pressure. For chemicals, a lot comes from the external market. So you have influence from the dollar that has been favoring this process. So we haven't noticed pressure that importantly from costs. For labor, naturally, you'll have some labor agreements with the unions that should change levels. Last year, we had almost 11% salary adjustments in a peak of the inflation, but now they should be about, and this will normally be what's going to be granted above the inflation. So generally, I'd say that the other line should follow the inflation. So there's not much of a surprise in this regard. But we've also been working on renegotiating, containing costs, and controlling costs, which is very significant this year. So Fernando Castro here also is asking about, he mentioned that he could be missing some topic, but no, Fernando, we didn't talk about this yet, the controller topic and the buyback. So the controller is still selling shares, and will these be bought by Irani? So until the value will reduce its sale. Well, this topic has already been discussed, and you can exclude these questions. And after, no, we didn't mention this, so we can talk about it. And I think that this is a great question, actually. It's something that always leads to some kind of questions. So the sale of these shares are really to fulfill commitments that controllers have at the holding levels. So they're selling shares because they want to pay for some commitments at the holding levels, and the strategy that the group has is to keep absolute control over the company. Great. And then just to clarify this, the controller is not selling to the company, and the company has a strategy for buying back because we consider that the company will continue to buy back, but this is not connected to the sales with the controllers, right? So they're selling for other reasons with their commitments at the holding level. So these are independent topics, but each one, right? Each one is independent. And Enzo also mentioned some commodity companies that are changing their references a bit due to the nature of this well, the first thing is that we have a big effort to demonstrate that packaging is a tailor-made project. Each customer has a project. You don't just buy packaging and present this as a chart in the international market, right? So our business is a customized business. It's not a commodity, and you don't have ups and downs as you see in commodity cycles. It's also not a currency oriented business because 85% of the market is local, so it's reais, and we are not studying this kind of change because we understand that the best indicator is an debt to EBITDA indicator, which is normally used by companies that have a business dynamic that's very similar to ours. Well, this current cash situation is just a circumstantial scenario. We have a minimum cash position policy and we want to keep this up, right? Which is, of course, defined by the board from time to time. So we our net debt to EBITDA doesn't have that much of a difference as you see at this moment because these resources are foreseen to pay for this debt. All right, so then Caio said, could you give us an update on when you expect the new boiler to start generating contributions for margins or EBITDA in 2023? Sorry, in 2024. Well, we don't provide this kind of guidance, Caio, and the project will start off now, and then we're going to start capturing this in the next few months. So Fabio Santana is just congratulating us on the results. If you have any initiative to expand the brand in 23 through reduction of ICMS or income tax to benefit from the law for incentives of sports, well, we always use the funds that are feasible or possible for incentive laws for projects that can adhere to our community relationship policy, stakeholder relationships. So we have the marketing department selects projects, especially if they're projects in surrounding communities close to our factories, and we try to use these incentives, whether they're federal or state. So we already do this kind of thing, and we always try to allocate these resources to closer reality of these operations as possible. Humberto Costa Santana congratulating Irani for earnings. And he decides he would like to keep up with investments and he doesn't invest in competitors. He really believes in the future of Irani. And then we have Gildo Araújo de Moraes saying, good afternoon. I would like to know what the criteria is for employees to be compensated with shares in the company. And do these criteria apply to everyone at all levels of the company? No, we have actually a upside program for the directors, which is connected to the actual value of the company over time. And we don't have a shares or stock option plan for employees overall. We've been thinking about this, however, and we do believe we'll have a plan like this for the future. But at this moment, we do not have a stock option plan for the general employees. We do have variable compensation for managers, like bonuses connected to their performance at the short term level. And for the employees, we have a variable compensation program connected to targets and operational goals or projects, but nothing really connected to the actual stock in the company. Great, guys. And the last question here is from Flavio Muniz. He wants to know if the company plans to take advantage of the drop in the dollar to reduce leverage in 2023. That is, if the company has any kind of debts in foreign currency. Well, we basically don't have this kind of debt. Only 2% of our debt in dollars, and they're really short-term operations. So it's more of a exports portfolio issue, but our objective is that we'll have this close to zero, so we don't have this volatility in dividends, so that the future investors can have this kind of predictability in dividends. So our debt is actually currently kept at local currency, really. Yeah, exactly. So I think on our side, that's it, since we don't have any other questions. And I think a final message that's very optimistic here is that we have been completing the main Gaia projects, although there are possible drops in results. Um, so we have started to capture these results with the Gaia platform. So we're super optimistic with the performance in the company in the next quarters due to the capturing of the main projects at the Gaia platform. So thank you all so much for your presence, and we will always be available to clarify any other questions you may have, or any questions you may have as analysts through our investor relations team. So thank you. Warm regards. See you next time. Bye, guys. Thank you. Have a nice day. Thanks. Goodbye.